Well, two steps forward, one step back. The Aussie share market is eyeing profit taking today, but remembering on Friday we closed at that brand new record high with the ASX 200 rising 0.8% to 6,929 points on a trifecta of stronger than expected economic news that came last week. We saw the S&P ASX 200 clock up a rise of almost 3% last week. That was our best gain in a year, thanks to the economy bounding forward on stronger than expected retail, trade surplus and housing approval data, all topping expectations. However, this morning we are expected to see that soggy start as expected as over in the US. That's exactly what happened there on Friday. US stocks hit new record highs but retreated after weaker than expected jobs data came out showing 145,000 jobs were added to the US economy. That was 15,000 less than expected, while the US and Iran tensions do linger on, particularly after Trump tweeted that he was standing by Iranian protesters who took to the streets in droves after their leader, the Iranian leader, admitted to accidentally shooting down that Ukrainian-bound Boeing aircraft. Meantime, the Dow Jones did hit a new record high of 29,000 points for the first time ever, but did end slightly lower. In fact, 133 points lower, in fact, 0.5% lower, while the S&P 500 slipped 0.3%, and so did the tech-heavy Nasdaq. While all of the US indices posted strong gains over the week, the Nasdaq was up the most. European markets slightly lower on Friday. Meantime, to commodities, gold inched up on the weaker than expected US employment data, and gold is at $1,560 an ounce. The oil price is steady at 59.04 cents a barrel, falling 6% last week. Meantime, the iron ore price is steady at $93.56 a tonne, and the Australian dollar is buying 69 US cents. As for what to watch today, I'd be watching clean energy companies in light of our Prime Minister saying the government's 26 to 28% emission cut goal has been set as its election policy. So keep an eye on clean energy companies ranging from Invigen Energy to smaller companies like WinLab and Carnegie Clean Energy. Also do think outside the square when it comes to clean energy as well. Meantime, Citi has made several upgrades and downgrades to oil and gas companies, noting Santos is its top pick for the oil and gas sector, which will benefit from the sector outperforming in 2020. Citi says possible upside for investors will come in way of price reviews and upgrades, while earnings for the sector are likely to exceed 20%. Meantime, Hub24 was reiterated as a buy by Citi, noting its growth should be over 40% over the next 3 years. Hub closed at $11.42 on Friday, and Citi expects Hub24 to grow to $15.20. And lastly, Lendlease was rated as a buy by Citi following the property and infrastructure coming to the beginning of its exit of the engineering business. Lendlease closed at $18.32 on Friday, and Citi expects its price to get to $24.72 in a year. That's plenty food for thought. Do have a great day. Happy trading.